All right, my friends, you're asking how the great state of Oregon taxes retirees, aren't you? Well, you've come to the right place because that's our next episode here in the Heritage Wealth Planning YouTube channel. How does Oregon taxes retirees? So let's dive right into it and find out. But first, welcome to Heritage Wealth Planning YouTube channel. This is a place where we tell you about all the 50 states, how they tax the retirees, and all kinds of other financial planning related topics, Social Security benefits, Medicare, how to reduce your taxes, financial planning, retirement income planning, estate planning, you name it. We cover it here at Heritage Wealth Planning YouTube channel. So if you like what you see here, click on that little button down there to subscribe. And if you do subscribe, hit the little notification bell to be notified of future content, because we do about 5 or 6 episodes a week here at Heritage Wealth Planning, all to get you squared away with your own financial planning situation. All right, so let's dive right into the great state of Oregon and see what Kiplinger's. I've had some disagreements with Kiplinger's, a few, just some of the states they say are not tax friendly. I find to be a lot more tax friendly than what Kiplinger says. And Kiplinger says also with Oregon that they're not tax friendly. So let's see why that's the case. They give Oregon the light blue shaded color, which says not tax friendly. So let's find out why. Because again, some of the other states they say were not tax friendly. When he actually ran the numbers, they weren't nearly as bad as what you would be that they're implying. So the Beaver State top tax rate of 9.9 is applied to taxable income of $125,000 for singles or $250,000 for married filing jointly. Now that's taxable income. And if I said this once, I'll say it a million times. You got to add your standard deductions in there, or your deductions if you're writing off some other stuff. So you take your married filing jointly at $250,000, you add your $26,600 of standard deductions. That'll give you what, $276,600 of gross income before you're in this 9.9%. But that is big. Once you're in that threshold, you're paying. That's a lot. That's a big tax for not a huge amount of income. That's for sure. Oregon does not tax Social Security benefits. That's good. But most other retirement income is taxed at your top tax rate. However, you can deduct $6,250 of federal income taxes paid on your Oregon return, and there is a retirement income credit for seniors with certain income restrictions. I want to see that. One bright spot is the absence of a sales tax in Oregon. Good. So you can buy anything in the state and never pay a penny in sales tax. That's good stuff there. There is a senior citizens property tax deferral program, but it is income limited. And anytime I see the word tax deferral, I always cringe, because that just means you're kicking it down the road to be paid at a future date. It's a liability. It goes on if you had a net worth statement, a balance sheet, you'd have to say this is not an asset, it's a liability because you owe it. Income tax range low is 5%, and that's only if you have taxable income over $6,600. Wow, and that's a low. And we just talked about the high. Wow. Effective income tax rate is basically 8% across the board. But Social Security benefits are not taxed. Let's see about exemptions for other retirement income. Most new residents will find that their pension income, along with most other income, is taxed by Oregon. If you receive a U.S. government pension, however, you may be entitled to subtract part of that on your Oregon individual tax return. The state does not tax railroad benefits, and no one does. And depending on your age and income, you may be entitled to a retirement income credit on your Oregon return too. The credit is the lesser of your tax liability, or 9% of your taxable pension income. The lesser of your tax liability, or 9% of your taxable income. All right, so if you have a $100,000 pension, that's $9,000 would be your taxable income. If you had retirement income credit, the credit. If you had $10,000 tax liability, you would get $9,000 pension credit off that. It sounds like to me. So you only owe $1,000. That's pretty good. If I'm reading that right, depending on your age, maybe entitled to retirement income credit. We've got to dive into that more. That sounds like it could be reasonable depending on what follows. Yeah. IRAs qualify for the retirement income credit as well. Oregon also allows a credit for the elderly disabled if you qualify for the federal elderly or disabled credit. However, you cannot claim this credit if you're claiming the retirement income credit. Okay. Oregon allows residents to subtract their current year's federal income tax liability after credits up to $6,250 on their income tax. So you get all those retirement credits, and you get to subtract Yeah, $6,200, $6,250 of your federal taxes. That seems pretty favorable, man. All right, well, let's keep diving in there. That seems pretty good to me. Public pensions qualify for federal income. All right, we already talked about that. So I just got to look at this again. The credit, so retirement income credit. The credit is the lesser of your tax liability or 9% of your taxable pension income. So if you have $50,000 of pension income, that's all qualified, IRAs, anything like that, $4,500 of that would be removed from taxation, from a credit of your taxes. All right. Okay, I get so 4,500. You get to write off 4,500 off your tax of your. You get to so basically 4,500 would be exempt from taxation, or it's the lesser of your tax liability. If your tax liability was 3,000, you get to exempt 3,000. We're gonna have to. I'm confused by that. It seems like it could be pretty favorable. But all right, let's keep diving into this. Property is assessed at 100% of market value, which is scary. County assesses properties and set tax rates. The counties do. The maximum assessed value cannot increase by more than 3% each year on properties that have not undergone a major improvement, such as addition. The median home value in Oregon is about 240, and the median tax is 2,500, so a little bit more than 1%. Tax breaks for seniors. Homeowners 62 and older may delay paying property tax based on certain income criteria. See, I don't like delaying, so I'm just going to. Taxes are owed when the taxpayer is in the universe. Okay, and so you got to pay them when you sell the property. Okay, so I'm not a fan of that because you're putting it in the future, and I wonder if they charge. Some of these states actually charge you a interest on that as well. They do have a state tax for states of more than $1 million, and they range from 10 to 16%. Yikes! So we'll have to dive into that. So all right, let's go to the foundation. Individual income tax is real high. They rank number 10 in terms of total tax burden in the U.S., and we don't want to be in the top 10 here. And they rank unfavorably in the bottom third, roughly, for Tax Freedom Day. All right, so how about sales tax? No sales tax, which is fantastic. Gas tax is pretty high, and cigarette tax is pretty low. So pretty low. That's weird. I would have thought Oregon would be heavy tax on cigarettes, that's for sure. All right, property tax, 1.01 is the tax rate. Yeah, so smack dab in the middle there. So that not oppressive by a stretch. So let's go to smart asset. I got to see what smart asset says about Oregon because I'm intrigued by the retirement exemption credit here. All right, so we're going to do a smart asset. We're just going to jump right into the, yikes, right there. So married filing jointly, born in 1953, $25,000 of Social Security income and $25,000 of retirement from IRAs. You're going to pay $1,200 to the state of Oregon, which is 4 times what you pay to the feds. Look at that. Now, I have had some issues with smart asset in the past as well, and I just wonder if their calculations are spot on here. Moderately tax friendly towards retirees. Let's just try something. I'm going to try something real quick. Well, if you have $50,000 of Social Security and nothing here, all right, it should be 0. Yeah, okay, good. So we got 50,000, nothing there. What if we have none of Social Security, 50,000 here, and yeah, $3,300. So there you go. That's your tax rate. Okay, so let me try something else here, my friends. What if we have nothing there, but we have 25,000 in pension, Social Security, and we're going to do a private pension, 25,000. Should be $1,000 or so. Yeah, okay, so $1,300. So yeah, the feds definitely tax you a whole lot less than Oregon does. Weird that they're saying it's still moderately tax friendly. I got to see the retirement taxes. Is Oregon tax friendly for retirees? Right here. Are other forms of retirement income taxable? Yes, income from an IRA 401k is taxed at range from 5 to 9.9%. Pension income is also taxable, but some seniors may be able to qualify for a credit on that income. The credit is available to seniors with household income pretty low. It doesn't say anything about that exemption. Oregon is moderately tax friendly for retirees, exempts Social Security benefits from the state income tax and no sales tax, and Property taxes aren't that much higher than national average. Unlike many other states, Oregon does not exempt or allow deductions on income for retirement accounts. The state also taxes pensions, even though seniors with a below threshold complaint. Okay, that's not what Kiplinger says. So Kiplinger, they didn't say anything about the income exemption. And depending on your age and income, you may be entitled to retirement income. I guess they do. Depending on your age or income, you may be entitled to a retirement income credit on your Oregon return. But it doesn't say what your income is to get that. All right, so let's go back to smart asset. A 9% credit on income. I'm going to pause this. I'm going to look into the tax code of Oregon because this is a pretty big deal. And I'm not seeing anything on what you have to qualify to get that credit on your income. I'm not seeing. So I'm going to pause this. I'll be right back at you, my friends. All right, my friends. So looked at the Oregon tax publication, and you can see the link up here, and I'll put to the show notes. And it actually says who can claim the retirement credit, who can claim it. And this on page 101. If you're age 62 or older, and how do you qualify? Your household income is less than $22,500 or $45,000 married filing jointly. So and that's your household income. And I'm not sure if that's taxable or AGI. Yes, household income generally includes all income, both taxable and non-taxable, each spouse received during the year. So that's going to be your gross income. Yeah. That's going to be household income includes your gross income reduced by adjustments as reported in your federal AGI. So basically, it's going to be your gross income, your AGI. So if you have $45,000 or more, you don't qualify for the retirement income credit in Oregon. So essentially, going back to .com, that taxable amount on $50,000 of income, about $1,200. That's roughly 2.6%. I'm just curious. Let's do 100,000 here. Let's do 25 there, just to get a gauge. And we're going to say boink. So that's $75,000. Yeah, 3. So you start getting up there in taxes and the income, you're going to start paying more and more taxes. And here's the tax rates right there for Oregon. So look at that, man. Wow. 7% on married filing jointly with taxable income over $17,000, and 9% married filing jointly with taxable income over $17,000. That's pretty significant for sure. Again, at the end of the day, if your Social Security is a primary source of your income, you're in a pretty good place. If you have low Social Security income, you're not in a good place. That's all there is to it. So Oregon, you need to be looking at Social Security and Roth IRAs for sure, because they're going to hammer you from a tax perspective. Now, at the end of the day, no sales tax, and at the end of the day, moderate property tax as well. So there's a couple of things going for you there for sure. So don't overlook the great state of Oregon. You might have to pay more in income tax, but if you do some pre-planning, you can get a lot around that for sure. But you just got to be planning. So hope this helps, my friends. If you like what you see here, don't forget thumbs up. Always subscribe down below. Love to hear your comments. Again, if you have boots on the ground in Oregon, maybe California, Washington, or some of the other states out there, and you know people in Oregon and or other states that are looking at Oregon, I'd love to hear them. I'm not there. I'm in Georgia, and I'm just going off by what these websites say to include the Oregon's own tax publication. So if you know somebody who has some boots on the ground, put the comments below. I'd love to hear them. Subscribe, thumbs up, comments. Of course, go to heritagewealthplanning.com, heritagewealthplanning.com for the updates to my podcast, my blog posts, and more videos as well. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.